Hello and welcome to the Wendell Effect. My name is Brendan Wendell and I'll be with you kind of guiding you through my views of the markets. So we're going to go ahead and kick this off. We'll get started. Let me adjust the screen down a little bit. By the way, if you enjoy the video, please hit like, subscribe, and share as well. So that way we can share this to more people and get more people involved in the financial markets with the right views of the way things are going. So before we get started, just need to remind everybody that I'm not a broker dealer or investment advisor, so I'm going to be looking at the markets from basically an educational standpoint. And past performance is no guarantee of future results. There's always risk involved when it comes to the markets. No matter what we do, we can't eliminate the risk. We can only try to minimize it and manage it. And we're not subject to trading restrictions, so we can have a position of security initiate one at any time. If you want to stay in touch with me, let me know. You can email me at the Wendell Effect at trainingmindsetassociation.com. You can also contact me via Twitter. Also, we're going to be doing a live session of these coming up very, very soon. I believe it's mid-June to late June. So keep your eye on the announcements. We'll go ahead and let you know when that's going to be. So you can join us for the live Wendell Effect and get your questions answered as well. Anyway, we're going to kick off here taking a look at the weekly market analysis, of course, as usual, weekly index futures, then moving on to the energy futures, then to sector analysis. And I even got some trading ideas on individual stocks. And then we're going to wrap it up with the India markets. If you remember, trade school is going to be separated now. We'll be looking at that on its own. And there'll be lots of great topics for you to learn about as well while we do that. So kicking this off, we're going to go ahead and for the week of May 30th, look at the equity index futures on this little bit of a shortened week because we have the holiday going on. So happy Memorial Day and a remembrance for those who gave the ultimate sacrifice for our freedoms. Anyway, we're kicking off here with the ES, and looking at the S&P futures, you can see that we had a pretty good retracement already. We pulled back about 50%. We had a pretty bullish week last week, and that doesn't mean that everything's turned around or we're going up by any means. There was no divergence here at all. Usually for a change in trend, we should get some sort of a positive divergence before that change happens, and it just didn't. So I think this is just a correction before we continue to sell off this week. And, time will tell. We'll see. On Sunday evenings trading going into Monday morning, we had a little bit of selling pressure already seen to kick off the beginning of this week as we tagged that 50% retracement. So whether or not that will continue is yet to be seen, but I got a feeling it's going to. So I'm not really too bullish on this week when it comes to the markets. I think we're going to continue to sell off a bit. Looking at the ES daily, remember this was last week. We had a positive divergence, and I said positive divergence means there's going to be some sort of a pullback or correction. Sure enough, that's exactly what happened. This is this week's now. You can see after that correction, that's all we did, Monday through Friday. Well, actually, I guess Monday we had a little bit of selling pressure, but it ended up with a bottom tail for bullish pressure, and all we did was push up. Actually, no, I'm sorry, that was Tuesday last week, because this is including Sunday going into Monday of this week. So that's where we're seeing the selling pressure after we tagged the 50% retracement. Okay? Going into the 4-hour chart, you can see we exactly hit that 50% retracement. Now on the 4-hour, we did become bullish. We went into the bullish territory, but overall, the higher time frame trends are still bearish. We're not seeing anything telling us that we're going to reverse trend. So I would not be surprised to see the bearishness kick in again. Keep an eye out for this area at about 40.50, maybe 40.30. There's a little rally-based rally demand that can pause downward movement in price maybe on Tuesday or Wednesday if we start selling off. If we do try to rally, unfortunately, we're going to run into a bit of selling pressure right away, so we got to keep an eye out for that. On the Nasdaq, we didn't even have as much of a retracement. Remember, the S&P retraced 50%. Here on the Nasdaq, we only pulled back 38.2%, and it looks like we're getting ready to drop yet again on that index. So seeing lots of bearishness, basically getting ready to come back in because we didn't have enough momentum. After that divergence, we didn't get any confirmation of reversal. All we got was a pullback. And again, it was only 38.2% here, not even 50%. So it's a weaker pullback. Again, at the 4-hour time frame, same thing going on here. You got that topping tail that happened yesterday and today. I'm recording this on Monday during the holiday. So Sunday going into Monday on the shortened day, we actually had a bit of selling pressure in the afternoon that gave back a lot of the gains we had. So not really very strong. Obviously, holiday, you're not going to get a lot of trading anyway, but overall, I'm seeing a lot of bearish just getting ready to come back in and more selling pressure. Kind of looking at the holdings again, I did this last week, and you saw that really we want to focus on Apple, maybe Microsoft, and Amazon to give us an idea where the Nasdaq's going to go. And you look at the Apple chart, Apple was a little stronger. It did like the S&P, not the Nasdaq. It went up at 50% on the retracement. So a little bit more retracement there than what we saw on the Nasdaq itself. But if this is the only component that did that, and if it gives up, we got to wait to see on Tuesday morning what happens with Apple. And if Apple starts selling off, the Nasdaq's going to drop with it, no problem. If it rallies, we've got 61.8%, and there's actually a supply zone there as well. Kind of a drop-based drop right at that 50%, which is 153.54. So if we end up stalling out, that's where it'll be if we do try to rally on Apple. The Dow actually was holding up a lot stronger than the other indexes. You can see it retraced about 61.8%. But the weird thing is all the markets are at a retracement value now and are starting to find weakness at that retracement value. So it doesn't look like we're going to be able to keep going to the upside on any of these markets. They're looking very, very weak. On the daily chart, pretty much the same thing. You see we tagged that 61.8, so it was stronger than the other markets. But yet again, we couldn't hold it. And we're showing that this is weak. We couldn't get above 60 on the RSI, so we're still seeing that's likely to continue to the downside for the market. Same thing on the 4-hour. Really, nothing's changed. Lots of bullish pressure. You can see the RSI went way above 60. But as we came into that retracement value of 61.8, we're now selling off again. And it looks as though we're going to get ready to push down. But remember, this market is not the one to short. The Dow has been a stronger market. The weakest market has been the Nasdaq, and the S&P is kind of caught in the middle of it. Another weak market has actually been the Russell, and the Russell didn't go as weak as the Nasdaq did. The Nasdaq only retraced 38%. The S&P and the Russell have retraced 50%, and then the Dow did 61.8%. So it was much deeper retracement there. Anyway, you can see that we've got a little pullback, but same thing, we got a lot of selling pressure. So I wouldn't be surprised to see if we break the low of this candle like we do on the other ones. That would be our confirmation we're going to continue to push to the downside in those markets and look for selling. The low was still below 40 on the RSI, so there's still a lot of selling pressure here. Even though we were trying to reverse, it couldn't give us a confirmation of reversal. So instead, you can see we stalled just shy of a supply zone too, and we're starting to find more weakness. I think the Russell, along with the other markets, are getting ready to drop this week. All right, so we're going to move on here to the energy markets for the week of the 30th. And starting off on crude oil, still continuing to push higher. We're getting almost making some new highs, it looks like. We didn't quite do it, but we should be able to do that this week. I don't see any reason for us not to. Yes, the momentum is a little bit less than it has been before, so I'd expect some sort of a pullback at some point. But overall, still very bullish. You can see we broke out of our kind of a ascending wedge or triangle that we had. We retested and then continued on. So this is legit. We're going higher. And we kind of formed a little bit of rally-based rally right here, just around 109, 110. So if we do pull back, that would be a good daily demand to buy into. Looking at the 4-hour chart, you can see we stalled out at 61.8. And we're on our way now to the 117, which is basically duplicating the prior impulse up. So that's going to be our next stalling point, if you will. So I'm looking for longs until we get there. Basically, on the smaller time frame, 60 minutes or less, I'm looking to buy because the overall trend is still very, very bullish. Looking at nat gas, we had a little bit of divergence that gave us a little pullback. Another divergence, we should expect more pullback. So far this week, we got a little bit Sunday going into Monday on the shortened holiday period, but when we reopen, we may still see some more selling pressure coming in. You can see it's getting a little stronger here when you go into the daily chart and the 4-hour. Interesting enough, we made a divergence here. Not only do we do a divergence, but we made a high that failed to get above 60. So normally that's a change of trend confirmation. So I would not be surprised to see if we continue to sell off a little bit. We really don't have a strong demand zone until we get to 7.125. So there could be some more selling pressure coming in. Overall, we're still very bullish on the larger time frame. So this looks like it might just be a small weekly pullback, meaning during this week we might experience a bit of a pullback, but ultimately we will continue to go higher. Moving over to gasoline, still very strong to the upside, but diverging. So you can see we have less and less momentum as we're making highs. That means we're going to get a pullback at some point, not a reversal again, but a pullback. And you can see here as well in the daily chart, we've almost made the same highs we did before, but we made a lot less momentum. So that's suggesting, again, pullback in price. but maybe a pullback only to 3.9150 to 3.8567. That's on the 4-hour time frame. So we're stalling at this supply zone right now on the holiday period. Light volume will probably pull back first, but that'd be a great buying opportunity to rally from the 3.91 area. Last but not least, heating oil still moving up, but again, the momentum is dying off as we're moving higher. That means we're going to get a pullback at some point. So looking at the heating oil right now, we bounced off a demand zone on the daily chart and obviously made some new highs, but we kind of formed a demand at 3.6671 to 3.4274, a wide zone. But if we pull back, that'd be a great buying opportunity to see us bounce again. Going down the 4-hour chart, we had kind of a false breakout of the downside retest, and it looks like this may be the move that takes us down lower to the 3.37 area. Again, we've got to do a pullback here most likely because we lost a little bit of momentum. So I wouldn't be surprised to see this continue to drop down until, like I said, about 3.6671, which is beyond this. So we've got a couple targets along the way to keep an eye out for, ultimately taking us that retracement before we rally to new highs. Moving over into the stock market, U.S. stock market here, I'm going to take a look at what stocks are moving right now, kind of the overall sector performance, and basically what to expect going forward. So you can see what we did previously for the last 6 months that I got going on here. We're looking at November of last year to May this year, and the leading sector has been energy along with utilities. So that's really more of an inflationary and defensive move. And we'll see if that's going to continue. Basically, the only positive sectors were more or less the defensive sectors here, with staples, healthcare as well. A little bit of materials too. That's inflationary effect. Dropping down in the last month, you can see we still have lots of gains there in the energy market, and we still see utilities doing pretty well. So looking for the last week and seeing what actually happened. Last week, pretty much everything rose, but notice we got a lot of rallying still in the energy markets, although discretionaries, which have been beaten up for quite a while, and financials led us last week. So we need those to lead long term to let us know we're out of the bottom of the markets. That hasn't happened yet. This just is 1 week. If that continues and you end up seeing it for a full month, then yeah, I would start to say we're nearing the end of the market bottom, or we've come out of the bottom actually. But that's just 1 week. So that is what you would normally see, is that the financials and discretionary should lead us off the bottom, but it's got to be more than 1 week. So we'll see if that continues or not. Going into the energy market, as you can see, it was extremely bullish after we did a 50% retracement. We talked about that on the daily chart a couple weeks ago, that retracement down to 50%. And we've kicked off. It looks like we got room to go to 89.30 or even all the way up to 95.13. So this has more momentum and does not look like it's done moving up. So the energy market looks pretty strong still. You can see that this is from this week. Everything is bright green, lots of bullish pressure. Look to buy the pullbacks. And you go into some of these Baker Hughes, BKR, this was consolidating last week. You can see the lower highs and higher lows just consolidating and getting tight. And you expect a breakout typically in the same direction. We talked about that last week in my video. Well, let's take a look at where it went. You can see it did exactly that. It broke out to the upside. Now, again, I don't jump in on breakouts. I've said this before, and I'll say it over and over again. I wait for a retest, and you can see it gave you that opportunity. We broke out, retested for the long, and then went higher. So again, going back, you see this is what it was like back on about the 22nd, 23rd of May. And then now, a week later, I was right in here. We had that breakout, pulled back, giving you the opportunity, and then continuation. So as of right now, if you're in this, stay in. It looks as though we might get a little bit of weakness. If we make another high coming up here, if we retest this prior high, we need more momentum. If we have less, look to book profits before it pulls back. So hopefully you got a piece of that. Another one I'm looking at right now is Earthstone Energy. This is still a very strong sector. It looks like it's got upward potential, as I said. So I'm going to look for stocks that are strong. If they pull back, I'm going to look to buy them. And with Earthstone Energy, we have two potential buying opportunities. One is going to be at the 1565 to 1652, where we have a rally-based rally area waiting for it to pull back and then continue to go higher. Now, if we retrace all the way back, this is rally-based rally. Actually, the pink ones have already been hit. We're almost at the target. The blue is if we impulse up, correct down. If you were to buy, excuse me, at the 1652, my first target is 1872. That'd be the first target right there. With a stop, of course, at about 1560, right below the zone. Now, it could go lower to the lower zone, but not really. If this is going to be a strong move to the upside, we want to stay up here at this demand zone and look for the breakout there. In other related sector stocks, SM Energy Company also has a really good rally-based rally area of demand. So if we can pull back 39.15, 40.74, looking to buy with the stop underneath at 39.10, basically. Target number one was at 48.89 right there. And then target two, 53.94. Just waiting for it to continue to go higher after the pullback. Also, CLR, Continental Resources. Now, this demand zone is not formed yet. We have rally base, but in order for it to actually be qualified as a demand zone, I need another new high on the candle after the one that we have here. So typically after the leg out, I need two new highs. If I get that, then this is a valid zone. I look to buy 66.45, 66.56. But if we immediately get a red or a green candle that doesn't make a new high and pull back, I'm not going to be buying this. I'm going to be buying the established zone here. We have drop, base, rally with two new highs after the leg out. So depending on what happens this week, if we open up and we actually get another high, then yes, I'm going to buy the upper zone, the 65.56 to 66.45, and target, actually not this level, but it'll probably be up here, 72.72. If we do pull back, though, without making this a demand zone, then I would look to go long at 60.47, 61.77 on the bounce. Target one is actually 68.54. Target two is 72.72. And we can move over to utilities and other strong sectors. You can see this whole week was very, very green, very bullish. So looking at the markets there, the XLU, I was seeing us as possibly pulling back, thinking this XLU was going to die off because we were bumping up against this supply zone. But really what we were doing is chipping away at it, apparently. Because going to this week, you can see we tested that zone multiple times and popped through. So now the trend has become bullish, and it looks like it might even be able to carry some new highs as well. So I'm going to be watching out for that, some more bullishness here. NRG is a utility stock that I was looking at, and you can see that I was waiting for it to pull back to 41.22, 40.75. This was last week where I was looking at, we had a little bit of a pullback already. I was actually hoping to pull back to some demand to buy. Unfortunately, never did. You can see this was 20th, 45. Where is it here? Yeah, there it is around the 20th of 45. All we did was just go higher, and we made the first target. So there might be a demand zone forming here, but I don't like the basing before we get there. So I'm probably going to stay away from this now. We're losing our momentum. Anyway, the next sector is healthcare. As you can see, very, very green. So with healthcare, we've been pulling much higher. We're making higher lows, higher highs. We have not gone above 60 yet. We're very close to it, but we still haven't done it. So there's a little bit of underlying weakness here in the trend. So I can look at Perigo Company. If this sector does continue to go higher, this is one of the strong stocks. So in the sector, if we get a little pullback or then continue to go higher, or even if we just go higher up into, I don't really have any overhead supply, but Perigo, basically waiting for a pullback to buy 37.69 to 38.72. Target one is 41.17, target two, 42.45. And target three is the purple lines, 46.54. So it looks pretty good with a rally-based rally there. We've broken up to the upside, should get the retest. The last week, I had Eli Lilly out there that we were looking at for a trade opportunity. You can see Eli Lilly was giving a little bit of weakness here. We actually made a new high with the lower high, or just weakness on the momentum indicator there. And actually, it never pulled back to my demand zone. I was looking to buy Eli Lilly because I thought with this, we were going to pull back to give us a buy opportunity. And you can see it never did. It just shot to the upside. So unfortunately, missed out. No big deal. Just I was right on the direction, just couldn't execute. Same thing with Pfizer. On Pfizer, we were coming up towards the supply zone, but we were making higher lows and higher highs. This is a pretty strong area of, strong trend to the upside it's trying to make. Sure enough, it ended up busting through and retesting now. Now that's retesting, we might end up using this as kind of a support level before we go much higher. So don't really have the best trade opportunity here, but there is definitely an opportunity on Pfizer. If we do pull back through that demand zone, then your demand is right here at 50. You can see we got drop, base, and rally. But honestly, I think we can hold this 53.10 to 53.93 and continue to shoot upwards from there. The other sector that usually performs well in down markets, or at least holds up better, is consumer defensive sector. Again, you're seeing lots of green there too. And looking at the consumer staples, we actually retraced 50% of our most recent drop, almost 50%. So it might be a little more to go. I would have liked to see more of a move up. So I don't think we're out of the woods yet. This is still, there's still a little bit of run to safety, but not as much as I would have normally expected. The sector rotation's a little off compared to what it has been in the past. Anyway, one of the securities I'm looking at for this sector to perform, and it can do one of two things. This is Grocery Outlet, GO, Grocery Outlet Holding Corp. One of two things is going to happen. Either we pull back to this area, demand for a long at 35.03 to 35.95, and you can see the targets overhead, or we go from sideways to break out to the upside. Now, if we do sideways breakout, I do not trade the breakout. I wait for it to break out, then retest this 38.95 as kind of a demand zone before I go long. So that's what I'm going to look for here. Either the pullback and buy at 35.95 or the breakout and pullback and buy at $39 basically. So overall for the sectors, one of the things I've done before, and I've talked about this, I believe it's some videos that I did online, it's in chart school and stuff, is a spread chart looking at the discretionary versus the staples. When you compare the two, when this line is going up or this chart is going up, it means consumer discretionary is doing better than the staples. That's normally very bullish for the markets. As you can see, in 2022, we started making lower highs, lower lows on this weekly version of this, and that showed the markets were very bearish and pulling back. It's not done. As you can see, we've had a small retracement, but overall, we're not even at a good demand zone yet. 59.47 is demand, 54.08. And then you've also got the origin of the move down there. So this is suggesting we'll continue to push down, which means the stock market will continue to go down. The Dow, the S&P, the Nasdaq, the Russell, all four of them. So if I go out, I'm not sure if, nope, I don't have it live right now, but I could do that. XLY, XLP. And I'm on the daily chart here. Again, I started off on the weekly for the picture and went down to the daily chart. And really, there's a little bit of divergence here. So you got some warning. Okay, this can help you understand when the markets are going to change direction. Because when you get divergences like that, where prices are moving down, but the momentum is not, right there, boom, you got that pullback that occurred. It's usually warning you before that happens, right? Well, we may be close to being done with this retracement. I'm not sure. Let's see. We could probably go from here down. We got some possible turning points, or maybe I could go from the whole move. I don't know. But either way, we still got a little bit of room to go still to the upside, but the overall trend is still down. I don't see it changing. I'm actually curious about the moving averages as well. We kind of snapped that one, but that's not really the one that's working too well. Start off with a 50. Way too far. Let's try 21. Yep. And we've closed above it before, but then closed right back below. This is on the daily chart, okay? If we get multiple closes above, then expect a trend change. We've gotten one. So if we get another one, either above or below, we'll get more direction. If we close below on the next candle, expect us to continue down right away. If we close above, we could go a little higher. That's all I'm seeing right now. So overall, still pretty bearish in the markets, looking like it wants to continue. I'm going to jump over to India now and help my friends out over there looking at the Nifty and the Bank Nifty. So the Nifty on the weekly basis is still down. We're making lower highs and lower lows, still pushing down. The momentum is still strong. We just got a little bit of a pullback, a reprieve, if you will. So you see it's retraced a bit. We still might have a little more to go up to 61.8, but then it looks like we have kind of drop-based drop supply right there at about 16,700 area. So look for that to continue to go down this week. Going to the 4-hour chart, you can see why. We're actually at an area of supply. We have drop, base, base, and drop. So came up to that 16,669. It looks like we're getting ready to drop again. We might pause on our way down to 16,201, but ultimately it'll continue to go down. Reliance is one of the reasons why we were moving up. As you can see on the 4-hour chart, I was looking at Reliance last week, and it did poke up into that supply zone I mentioned, stayed there for a little while, but eventually broke through. Now we're at a 61% retracement. This is likely to be where we stall out, although we're above 60 on the RSI. So I think if we get a little pullback, we could go a bit higher before we collapse. I'm waiting to see more weakness coming in on Reliance. Then I'll be ready to start shorting the heck out of the Nifty, because until that happens, it's just going to kind of go sideways and choppy, I think. And lastly, looking at the bank Nifty, you can see on the weekly chart, still a nice downtrend. We failed to make a new low here, so that's kind of curious. We did actually get lower momentum, but it didn't make a new low in price. It's kind of a hidden divergence where the indicator's pointing down, but the price is pointing up. That's bullish, underlying bullishness coming in. You know, we had more bearish momentum, but we couldn't make a new low, even though this momentum was lower. So we'll see if that's going to continue to push up. We should at least test this down trend line before we start moving down. Yeah, we are kind of out of supply zone, though. We do have drop, base, drop right now. So we're critical point. If we get more bullish pressure at all, then we're going to go test the trend line before we drop. If not, we should be dropping right away from here. So when the markets reopen, look for that right away to let you know which direction to go in. It was interesting. I mentioned there was a head and shoulders or inverted head and shoulders here. Left shoulder, head, right shoulder. We started breaking, and that gave us the bullishness. But if this ends up failing here as well, then again, we're not going to get up to that down trend line. Look for the selling pressure right away. If it comes in, it's got to come in right away. If there's no selling pressure right away, there's some buying pressure, then we should continue to push higher until we hit the trend line. Anyway, that's what I'm seeing in these markets, and I will be putting out some more videos very, very shortly. Hope you enjoyed the Wendell effect. Again, if you did, please make sure you hit subscribe and like. That'll help me out as well and let me know what you guys enjoy. You can go ahead and message me. I might give you my email address, as well as you can message me here on the just by making some comments in the comment section below. And keep an eye out. I'm going to be doing that live session for you guys very, very soon. Love to have you there. Until next time, trade safe, trade well, and take care, everyone.